Hello, students. A very good morning. Hope all of you are safe and fine in this situation. So, let's do some auditing. So, what is auditing? From this picture, we can see is nothing but initiating, reviewing, preparing, conducting, reporting, completing, and follow up the total procedure. Now, auditing means the scrutiny of account books and the relevant accounting documentary evidence by an independent qualified person in order to ascertain the accuracy of the figures appearing therein. So you have to check, the auditor has to check whether the balance sheet is showing the true and fair view of the business, whether the PL accounting showing the actual gross profit or the net profit or not, whether their assets are valued properly or not. All these things are known as audit. From the screen, we can see the word audit is derived from the Latin word audier, which means to hear. In olden days, some experienced people ordinarily judges the account of business people for the purpose of the correctness of the accounts. Now, what is the meaning of audit? In general meaning of an audit is planned and documented activity performed by qualified personnel, it should be a chartered accountant, to determine by investigation, examination, or evaluation of objective of evidence, the adequacy and the compliance with established procedures or applicable documents and the effectiveness of implementation. Further, we can see that when the corporate enterprise started to grow, the result was dispersed ownership and the distinct separation of management from ownership. At the same time, the institutional loans and borrowings came to play a significant role in the running of industry and business. Also, the gradual expansion of the idea of the social responsibility of the state led to the introduction of the regulatory enactment in the field of the trade, industry, and commerce. So, in short, we can say the diverse interests grew and developed, and as a result, the objective of audit correspondingly changed in emphasis from time to time. Now, there are some definitions of the audit by the Spicer and Pegler. Now, come to the characteristics of auditing. Now we all know the what the bookkeeping is. Actually, auditing is an integral part of bookkeeping and the accountancy. Bookkeeping is the job of the bookkeeper as they assist to accounting to record the transaction in the books of original entry and then posting to a ledger. Now we all know what is a ledger is. So the bookkeeper should be conversant with the double entry system of the bookkeeping. Only then he will understand system of bookkeeping. Only then he will understand the need of journalizing, the posting, and the totaling, which is known as the trial balance. Now, after that, when bookkeeping ends, then comes the accountancy, which includes the checking numerical accuracy of the books of the accounts, the preparation of trial balance, the preparation of trading and the profit and loss accounts, and the preparation of the balance sheet. So, after the accountancy ends, the auditing starts. So, auditing involves a detailed analytical and critical examinations. So, from the screen, we can see what are the features and characteristics on auditing. First, the systematic and scientific procedure, so which are regulated through some parameters, some legal rules, how to audit the assets, how to audit the liabilities, how to audit the loans and the borrowings and the capital and the drawings and etc. There should be some essential documents of the integral part. So there should be some audit evidence. Suppose the auditor want to audit a fixed asset, suppose a furniture. So he should audit the vouchers, the bills, the invoices, the tax invoice, whether the furniture is properly depreciated or not, what is the rate of the depreciation, what is the scrap value, what was the estimated time period of the assets, and he should check where the furniture is. Means there should be some physical evidence also. Number three is it is done with the help of the vouchers, documents, information, which I have already told, and explanations received from the authorities. If there is any discrepancy, the auditor should send a letter or a show cause to the accountant. Number four, it is undertaken by an independent person or body. He or she should be the chartered accountant or the chartered accountant firm, and it is an analytical approach. It's also an art and science board. Now why it is an art? Now look, art means there should be some implication of some features or some explanations, and the science includes some rules. It's a combination of both an art and science. There should be some verification. The auditor has to satisfy himself with authenticity. There are some comparisons. And the last one, the auditor has to inspect, compare, check, review, scrutinize the vouchers supporting the transaction and examine the correspondence. MOA, and the AOA, etc., in order to establish correctness of the books of accounts. Now let's come to the scope of the auditing. The scope of audit is increasing with the increase in the complexity of the business. It is said that long-range objectives of an audit should be served as a guide to the management of a future decision. So we have to remember the work of an auditor to see whether the accountant has maintained the accounting rather properly or not. Now, if he is not maintaining the accounting, the auditor should give some tips to the accountant the how he should do the work better. So it's not like that an accountant has done some mistakes, then he should send a show cause notice or a wrong opinion report in the name of the firm, in the name of the company. So he has no power to take the action against anybody. In this regard, we can say that an auditor is a watchdog, but not a bloodhound. And today, most of the economic activities are largely conducted through public finance. The auditor has to see whether these larger funds are properly used or not. So, so, so there is a question of proper resource allocation. The scope of an audit encompasses verification of accounts with an intention of giving opinion on its reliability. Hence, it covers cost audit, the management audit, the social audit, the system audit, the tax audit, everything. So there are some legal requirements, some entity aspects, some reliable information, the proper communication, the evaluation, test, comparison, judgments, work, evidence, and misstatement. So in this regard, we have to know, so auditor has to make some principles. You have to follow some principles. The fundamental principles of auditing are the integrity, the objectivity, and the independence. The auditor should have independence when he is doing the auditing. He should not be bothered or he should not hear that some people is saying some of their opinions on the auditing. So he should have a 100% independence on what he is doing. There should be some confidentiality. He should possess some skills and competence at the time of doing the auditing. The responsibility, the documentation, the planning, the evidence, the accounting system, and internal control. The internal control system plays a big part in the auditing. So if there is not a proper internal check or internal control in the system of accounts, the auditor has to suffer. So if there is no internal control, means there is no checking. So auditor has to give 100% of sampling procedure in the system. There should be audit conclusions and audit report. The audit report will be submitted to the government or to the higher authority as well as to the managing director of the company. Now there are some three main objectives of auditing. The primary objective is the verification of accounts, whether the balance sheet and the PL are showing the properly or not. There should be some detection and prevention of errors. There is some detection and prevention of frauds also. In this regard, we have to know what the fraud means. A fraud is nothing but an intentional and is knowingly committed to defraud the proprietors of the concern. This is actually done deliberately to deceive, to mislead, or to conceal the truth of material facts which will affect the financial statements. Now, normally the frauds are the most serious than unintentional errors because the implication of dishonesty which accompanies them, maybe some trusted personnel of a management, the third parties, and the employees may be involved in committing fraud to obtain illegal gains or personal benefits. Now, generally, frauds involves either misappropriation of assets that may be called the employee swap, or whereas manipulation of accounts considered is known as the managerial fraud. So, thus detection and prevention of frauds is a great importance and constitutes an important duty of an auditor. Then, in the other objective, there should be some moral check, some compliances in the Companies Act 2013, and to create a trust for the government. Now, here are different kinds of errors. Maybe the errors of omission, the commission, the clerical error, the errors of principles, and the compensating error. Let's go to the first, the errors of omission. Errors of omission means if any transaction is completely omitted from the books of accounts, so that will give no effect in the trial balance. That we all know in trial balance there are two parts, the debit and credit. Now suppose there is an entry, the financial account debit to cash. If an accountant completely omit that account, that particular entry, so it will not give any effect in the balance sheet or in the trial balance. So automatically both the signs are equal, so that cannot be detected in errors. Next, errors of commission, like the rupees 1500 will be recorded as 5100 in both sides. So it will have no effect in the trial balance, but the auditor has to detect that. Then there is clerical error, the omission of posting wrong side and amount to the account, the double posting, the totaling mistake, or the balance brought down and carry forward. Then there may be errors of principle, the fundamental principle of accountancy and auditing. What do you mean by that? So suppose there is an furniture account debit to cash, but the auditor makes like something machinery account debit to cash. So both the furniture and the machinery comes in the fixed asset. So instead of furniture, if the auditor, if the accountant gives it a machinery, it will have no effect in the trial balance, automatically no effect in the balance sheet. But but it, but the mistake will be the mistake will be hidden in the books of accounts under the vouchers. So if the auditor make the auditing properly and he detect the vouchers, then only then he can detect the error. That is known as the fundamental principle of accountancy and auditing. The last one is the compensating error. It is a two error together which will be resulted in trial balance sheet, that will be agreed. Let's take an example. Suppose the company paid wages for rupees 1000 in cash for rupees 1000. So the entry will be wages account debit to cash 1000 to 1000. Now if the accounting makes an error, the wages account debit 500 cash, it means there is a deficit of rupees 500. But once again, what he did, he made another entry which was actually the salary paid rupees 1500 in cash. He made that salary paid for rupees 2000 in cash. So automatically the total of wages and salaries which is actually affecting the profit and loss account will be the same. The total amount will be 2000. So automatically they will have a no effect in the trial balance. So both sides are equal. So you cannot detect the error or fraud by just seeing the total of the trial balance because they are now equal. Now, if according to the instruction, if the auditor checks the vouchers of those audit and the salaries, only he can check the amount and then he can detect the errors. So the detection and prevention of errors is one of the most important job in auditing.